All right. Today is Sunday, November 28th. This is a recap for the stock market activities last week and an outlook for the week to come. Folks, I got a good one for you tonight, but where do we start? Heading into the shortened trading holiday week, our expectations were for a calm, low turbulence, low volume kind of week. So a lot of us, including myself by the way, decided to take the week off and not to trade. But as Al Pacino says, just when I thought I was out, they pulled me back in. It was an eventful week, starting with the renomination of Criminal Powell to the illogical release from the SPR, that is the Strategic Petroleum Reserve, to finally Black Friday, the crash of Black Friday due to Omicron. Another one. But let's back up here for a while and set the stage. Before Friday's crash, we were facing rapid inflation that is costing the administration politically, as only 35% of Americans say the economy is good. We were also anticipating that the Fed will rush tapering of their assets purchasing programs and even move ahead to raise interest rates, which could decrease the demand and speculation in the economy, thus inflicting a correction in the commodities, equities, and real estate markets, all in an effort to curb inflation. You see, the solution to this inflation and supply chain crisis, as we have discussed numerous times in this channel, is to slow down the demand and not by increasing the supply. Supply is by design in a free market supposed to track demand to equilibrium smoothly. And if, for whatever reason, demand surges beyond the capacity of the supply chain, inflation is born as a natural remedy to curb the demand. Yet we still have misconception among us about this issue. Take, for example, this comment from the viewer who assumes that inflation is rising due to the scarcity of supply. And he brings up toasters as an example. The real question is, what is causing the sudden surge of demand on toasters? Is it the pandemic? Because we had more than adequate time for the supply chain to catch up with the demand. For example, in the beginning of the pandemic, there was a shortage of toilet paper due to the sudden spike in demand, but that did not take too long to tackle. And the supply for toilet paper came back roaring as soon as the spike in demand dropped. Yet what we're seeing in the economy right now is different, with unprecedented demand on items such as electronics and used cars, regardless whether we have pandemic-related shutdowns of the supply chain or not. The answer to that is the unstoppable demand due to too much money printed out of thin air floating in the system. The Fed printed over $4 trillion since the pandemic started. This money is chasing stocks, real estate, commodities, and therefore we see these markets trading at all-time highs. Likewise, the money is chasing goods and services. Therefore, prices are surging higher as Americans buy goods they need and mostly goods they don't need. This is the core of the inflation problem. It is the demand, not the supply. Case in point, earlier this week, President Biden decided to increase the supply of oil by the release of barrels from the Strategic Petroleum Reserve. And guess what? Oil prices shot up higher. But when Omicron arrived, oil prices crashed on Friday because Omicron targets the demand. Therefore, he's back. When all else fails to curb inflation, release the Kraken.
He causes mild cough. He crushes oil prices and curbs inflation. He unleashes a new round of stimmies and makes our leaders look good. He is Omicron.
On Friday, the Dow Jones plummeted by almost 1,000 points, the worst crash so far this year. If the sell-off continues, we have a lot more pain to come, as the S&P 500 trades at a higher premium than the pre-pandemic period. Also, the positioning among market participants has been all in, so the unwinding could unleash a lot of pain. And of course, the Wall Streeters and the media propagandists were panicking on Friday. They had every propagandist out there assuring the public that everything is all right, including Dr. Shoe Polish Gottlieb, who wakes up in the morning and tells his wife, "Honey, do I have enough shoe polish in my hair or do I need a little more?" And just a reminder, Dr. Gottlieb, who's a former FDA commissioner, current Pfizer bitch, declared that the pandemic is almost over just 3 weeks ago. Take a look.
Does this, from what you can tell, and I know you're on the board of Pfizer, people say, do we ever disclose that? That's sometimes I think we don't have much time left for the interview. We disclose it so much. Do you feel that this Pfizer drug is shown better efficacy than the Merck drug, with perhaps less concern about mutagenicity or other side effects?
Well, look, there weren't comparative trials done. The bottom line is we have an overwhelming toolbox right now to combat COVID, and this is a phenomenal result. This exceeded any reasonable expectation, with all the usual caveats that this was a trial that was stopped early by the Data Monitoring Committee for overwhelming efficacy. I think the bottom line is the end of the pandemic, at least as it relates to the United States, is in sight right now.
And on Friday, the CNBC anchor, while interviewing Dr. Gottlieb, she followed up his answers by saying, the Dow is now recovering. The Dow is now only down 800 points. The Dow is off the laws of the session. As if she's saying, harder, harder, Dr. Gottlieb, push that Dow up harder. And I say, have you people forgotten that COVID is the best thing that ever happened to the stock market? I mean, if you're a bull, you should be cheering COVID, 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 because if COVID rises once again, then inflation expectations will be crushed. So will the 10-year Treasury yield, and therefore big cap technology stocks will rise higher as the TINA argument is revived and the Fed interest rates hikes expectations go kaputs. And of course, on Friday, so-called stay-at-home stocks, the likes of Zoom and Peloton surged higher, while oil prices crashed. And now OPEC is revising its supply hikes next year, and the Fed is likely to back off its hawkish stance if this variant turns out to be serious. So buy the dip, right? Not so fast. Because here is the consensus on CNBC from Friday. We have Terra Nova, who says take advantage of this Black Friday sale in the market. We also have CIO of Crescent Capital, who said he won't read too much into the sell-off. Sylvia Jablonski says buy the dip in tulips. Nancy Tender says buy the dip. Even Thupathackle Don Ivis says buy the dip in tech winners. And two used car salesmen also say buy the dip. This is an opportunity. They even got the old-timer to wake up Art Cashin, who also said this will be a bargain hunting opportunity. And of course, your favorite analyst from Niptone, Tom Lee, who suggested to buy the dip, no surprise here. This is of course the same Tom Lee who said September will be good for stocks, but watch out for October because it will be bad. And we now know that the opposite took place, of course. September was bad, October was fantastic. Of course, we have a new generation of investors who were born yesterday, and they glorify Tom Lee because, quote-unquote, he was right, bro. Yeah, so was my dog. All you have to do in a hyper-bubble mania market is say stocks will go up, and you look like a genius until you don't. But some of us who were not born yesterday, and we remember Mr. Lee's disastrous calls, such as in 2008 when he said the market will finish much higher and gave 1,590 as his target for the S&P 500. And we all know how that ended as the S&P 500 finished the year crashing at 903.25 points. Thomas also suggested to buy Citibank stock in 2008. If you did follow his advice, you went down, about 97%, which makes this the most disastrous call in stock market history. However, here comes the voice of reason out of all people, Jim Cramer, who said don't buy the dip on Friday. Now, let me let you into a secret because I work in wealth management. Why do you think that almost every year we have a so-called Santa rally? Because us money managers use your dumb money to buy the market aggressively in the fourth quarter because we want our year-end bonuses. And therefore, when the market crashed on Friday, they came out of their holes to tell you to buy the dip. They already ran out of your money. They have to wait till next month for new money to arrive. So now they want you to buy the dip. Otherwise, no bonuses. Now, let's talk about Omicron, the mandates, and the economic impact in general. Cases are rising rapidly globally, of course. Specifically in Germany, cases are rising in the United Kingdom, cases are rising in France, cases are rising in the Netherlands, cases are surging in Belgium, Austria, Denmark, You get the picture. And of course, it is just a matter of time before cases also rise here in the good old USA. We have already placed travel warnings on some of these countries, the likes of Germany and Denmark, and they will likely respond by doing the same, and therefore airlines are toast. I am already short airlines, and I think they're already toast and done regardless of Omicron, by the way. And of course, just a reminder, a few weeks ago, Israel always knows what's up ahead of time, such as 9/11 and Taco Tuesday deals. But anyways, Israel did a war game exercise just a couple of weeks ago to test the response to a jab-resistant variant that they called Omega. What do you know? We now have a variant with a large number of mutations, which could, keyword could, enhance its ability to evade protection provided by the current jabs. Dr. Fauci says that the US is rushing to collect data to understand how this new variant behaves and the risk associated with it. The problem is, he also declared that it is likely that Omicron is already here. And by the way, why Omicron? Because the WHO, the World's Health Organization, skipped new and the next one, she. And they say they did so because she is a common last name. Of course, 100% sure that is the real reason. Anyways, Omicron is already spreading here. And now nations like the UK, Germany, and Israel are closing borders. Even the US acted by banning travel from South Africa and many other nations, which I think is useless, by the way. If the virus is already here, what is the point? So how severe is this Omicron from what we know at this point? Well, the doctor in South Africa who discovered this virus says symptoms are unusual but mild and characterizes the symptoms as mild cough. And she stresses her concerns among the elderly, specifically the unjabbed elderly. And of course, we say don't make irrational, knee-jerk investment and trading decisions because we don't have any clues how this will develop. You could, for example, buy Zoom and go all in tech and shorting reopening stocks only to get hit by new jab optimism. As Moderna says, they are rapidly advancing the development of an Omicron booster, while Pfizer says it will take them about 100 days to do so. If Omicron makes their current jabs no bueno. And of course, this has been very good for our beloved Big Pharma insiders. For example, Moderna CEO dumped over $319 million worth of stock so far. And Pfizer is charging $24 a pop for the jabs, with plans to increase prices dramatically as the pandemic wanes. Of course, the European countries are saying that we, in the United States, are overpaying for the jabs. But we all know that this is done by design, of course, as the government launders taxpayer money to their big pharma donors. For example, the US will pay $529 a pop for Pfizer's COVID pills. And even Pfizer's CEO is saying, how come my stock didn't surge 500%? It's undervalued. I want some of that Moderna cash. And I think that the time is now appropriate to face the music that our public health officials have failed after over a year of draconian measures such as jab mandates and lockdowns. We are still facing the virus, and it is coming back stronger than ever. You can continue to buy the Kool-Aid and blame it on the unjabbed, but remember the pandemic of the unjabbed? Well, now it is the pandemic of the unboosted as cases surge among the jabbed, and it will go on and on and on. Matter of fact, the delusional public health officials say that boosters should be mandated for anyone to be considered fully jabbed, and even suggesting to punish small businesses $700,000 apiece for defying such mandates. Luckily, here in the United States, we still have a glimpse of rationale as courts decided to suspend Biden's mandate. Yet certain states and cities, the likes of Los Angeles, continue to have draconian mandates that are failing to curb the spread and only succeeding in destroying small businesses. Mandates are failing as more people defy them, including armed forces members, and even European countries, the likes of the Netherlands, imposing a draconian mandate to close evening commerce, or even Austria's draconian mandate that is costing the economy $1.35 billion a week and forcing over 400,000 into unemployment and reliance on government handouts. Protests erupted in Europe last week with massive crowds in Vienna, and even violent protests stormed the streets in the Netherlands, with protesters smashing police cars and lighting them on fire, while the police responding by shooting protesters with live bullets, scenes no one could have imagined to take place in a first world country, the likes of the Netherlands. Thousands stormed the streets in the Czech Republic to protest, and thousands continued to march against mandates in Australia, while a French government attempt to impose draconian mandates on Caribbean nations was met with massive resistance and protests. Even in Germany, the chancellor issued a dire warning for people to either get jabbed, recover, or die. Yet a lockdown attempt was shut down. Even New Zealand is letting go of their zero COVID efforts as they realize it is not working anymore. The truth is, researchers from Harvard in September issued a research published by the European Journal of Epidemiology concluded that increases in COVID transmission is independent of jab rates after studying 68 countries and 2,947 counties in the United States. And this is the researcher from Harvard, Dr. Sabo, who looks like a typical anti-science MAGA guy, right? How dare he suggest such a thing? I only trust the CDC. Well, here is the CDC.
Do you think the CDC and others, for example, got the messaging wrong when it comes to breakthrough cases, people who are fully vaccinated but get COVID? Experts have repeatedly insisted that breakthrough cases are rare, almost dismissing fears. But would it have been better to give a more nuanced explanation about what to expect?
I think we all have to recognize that with 164 million people who are vaccinated, we should expect tens of thousands, perhaps, of breakthrough infections. But the most important thing is not the number of the breakthrough infections, but what happens here. Those breakthrough infections have mild illness. They are staying out of the hospital. They are not dying. And I think that that's the most important thing to understand. We have a massive number of people who are vaccinated, and those breakthrough infections tend to be mild and not severe.
But what about all the fully vaccinated people who get the breakthrough infection? Can they pass it on? Could they pass it on to their children? Could they pass the virus on to older people, especially more vulnerable people with underlying health conditions?
And that's exactly the point that we made in our guidance. So yes, they can with the Delta variant. And that was the reason that we changed our guidance last Tuesday. Our vaccines are working exceptionally well. They continue to work well for Delta with regard to severe illness and death. They prevent it. But what they can't do anymore is prevent transmission. So if you're going home to somebody who has not been vaccinated, to somebody who can't get vaccinated, somebody who might be immunosuppressed or a little bit frail, somebody who has comorbidities that put them at high risk, I would suggest you wear a mask in public indoor settings.
Okay, I don't trust the CDC. I only trust Dr. Fauci. Well, here's Dr. Fauci.
Data that they reported indicates that if you look at the level of virus in the nasopharynx of a person who's vaccinated and has a breakthrough infection, and compare that to the level of virus in the nasopharynx of an unvaccinated person who's infected, they're essentially equivalent, which would go along and underscore the fact that vaccinated people who do have a breakthrough infection are clearly capable of transmitting the infection to an uninfected person.
So why are we mandating jabs again if they do not prevent the transmission? Why are we destroying the economy again? Now, to be fair, certain studies concluded that jabs indeed slow down the transmission rate. But here's the catch. They only do so because patients recover faster as their immunity provided by the jab is quick to eradicate the virus. And thus the shedding period is shorter than someone who is unjabbed and has to go through the process of producing antibodies naturally. We must have the humility to admit that the tunnel vision approach of jabbing everyone has failed, and doing the same expecting different results is the definition of insanity. I mean, we already have more fatalities this year from the virus than last year, even though back then we did not have any of the shots. Likewise, the country with the highest jab compliance rate on the planet, Portugal, is now also facing restrictions and lockdown measures as cases start to climb in that country. Our tunnel vision of jabbing everyone, including those at minimal risk such as kids, also failed and cost lives, as rich nations hoarded the jabs for themselves and failed to distribute them to poorer countries in Africa, allowing the virus to continue to mutate. This is not a surprise to us independent thinkers who stick to the facts and science, not the politicized toxic waste narrative from the media. For example, early on in the pandemic, Dr. Michael Levitt, the Nobel Prize winner in chemistry, suggested that the draconian measures such as lockdown cost lives, not save them. Sounds like an anti-science MAGA guy, right? Oh wait, he won the Nobel Prize in, science. In an interview with Stanford's newspaper, Dr. Levitt said, and mind you, this is from last year, I think lockdown is a very crude, medieval-sounding phrase. I think closing schools, closing businesses, and places of work is not such a great idea and causes huge damage to the economy. It is wicked to people in the economy, because if you are a gardener or you own a restaurant, you cannot work from home. These people have been very badly hit. I think that the retail sector in the US is not going to recover, which has been a great gift to Amazon. What you want is to do social distancing because you don't want everyone to get infected in the same time, because that could have a very negative effect on hospitals. On the other hand, when you look at New York City, where by all accounts things went completely crazy, they ended up not using all their hospitals and having ventilators to spare. It is also unfair to younger people and to the disadvantaged people who have not fully estimated some negative results of the lockdown. Suicides, for example, have increased dramatically in certain locations, along with marital abuse, child abuse, and addiction. Tobacco use has increased very substantially, and that is going to end up killing people. If people smoke 5% more, it would result in much more death than all the COVID-19 deaths by far. And I concur. A lot of us stopped going to the gym. A lot of us are eating more fast food. A lot of us are smoking more. A lot of us are drinking more. A lot of us are not socializing as we used to. All of this is unhealthy and has dramatic negative impacts on health than perhaps COVID-19. So what is the solution, you might ask? You always tell us the problem. What about the solution, bro? What am I, the president? And where is the president, by the way? Oh yeah, he spent the weekend at the $30 million mansion of billionaire David Rubenstein, who's a nice guy, by the way, but so much for middle-class Joe. Here's the solution. The solution is to forego the draconian mandates and follow science. You might say we always had mandates with measles and chickenpox, for example. I'll give you 5 seconds to realize that you're not really that stupid. According to the CDC, there is 2 types of immunity, active and passive. Active immunity results when exposure to a disease organism triggers the immune system to produce antibodies to that disease. Active immunity can be acquired through natural immunity or jab-induced immunity. Natural immunity is acquired from exposure to the disease organism through infection with the actual disease. The jab-induced immunity is acquired through the introduction of a killed or weakened form of the disease organism through jabbing. Either way, if an immune person comes into contact with that disease in the future, their immune system will recognize it and immediately produce the antibodies needed to fight it. Active immunity is long-lasting and sometimes lifelong. And now the definition of passive immunity, and by the way, this is from the CDC. Passive immunity is provided when a person is giving antibodies to a disease rather than producing them through his or her immune system. A newborn baby acquires passive immunity from his mother. People can also get passive immunity through antibodies containing blood products such as immune globulin, which may be given when immediate protection from a specific disease is needed. And here's the important part, so pay attention now. The major advantage to passive immunity is that protection is immediate, whereas active immunity takes time. However, passive immunity lasts only for a few weeks or months. Only active immunity is long-lasting. So which one do you think the mRNA jabs are, active or passive? How do you mandate something you cannot even track? Me and Joe Blow could get the shot today. Fast forward 3 months from now, and my immunity is poof, gone, and his is still going. We don't know why everyone is different, so how can we mandate such treatment? And this channel has been ahead of the game from the get-go, by the way. Last year, I shared this video with you from a doctor from Stanford who described the mRNA jabs as to have the so-called Snapchat effect.
In addition, RNA molecules have a weakness.
Here's the dirty secret. They are ephemeral. They're like the Snapchat of molecules. Our bodies make an RNA script and destroy it a few minutes later once they've used it as a little temporary instruction manual to make proteins.
The solution starts by foregoing efforts to jab those not at immediate risk from the virus, such as children who have a better chance to die from drowning than from COVID, or the youth who have a better chance at dying from slipping on a banana peel than from COVID. We should have an intellectual property waiver to share the jabs with poorer nations to prevent further mutations. I mean, isn't it enough that we cannot even sue our big pharma overlords if we get side effects? We should concentrate on jabbing and boosting efforts among the elderly and most vulnerable, but most importantly, develop an antibodies tracking method so anyone can scan their immunity levels and decide for themselves to get boosted or not. Therefore, the key to freedom from this virus is tracking. I am reminded by Microsoft's Steve Ballmer, who screamed, "Developers, developers, developers, developers."
Developers, 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 developers. Developers, 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 developers.
And I say tracking, 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 tracking. We already have the best medical and tech companies in the world. We are more than capable of developing such technology. Matter of fact, it is already here. Companies like Scanwell, for example, already developed an easy scanning method for antibodies, yet the FDA never approved them. LabCorp developed testing for antibodies for both natural immunity and passive immunity by the jabs, yet they were not approved by the FDA and remain for research purposes only. A strategy of jab, boost, and track for the elderly and most vulnerable combined with pills for the youth and least in danger will enable us to see the light at the end of the tunnel and prevent damaging the economy and small businesses any further. Although we have some bad news regarding the pill, since Merck's pill effectiveness is now reduced to 30%, down from 50%. The good news is we still have the Pfizer pill, and for what we know right now, it remains highly effective, and we have many more pills to come. Anyhow, folks, we talked a lot about this subject here with Omicron. But let's move on to the market's coverage. I'm going to skip the usual, and the reason is we had a lot of knee-jerk reactions on Friday. So I'm going to read some of my notes here and skip right through the charts, which I know you guys are waiting for. Some of my notes here read the obvious, of course. The market crashed altogether. The bulk of the pain was specifically for the reopening names, the likes of airlines, cruises, hotels, casinos, etc. Likewise, the rise of Omicron suppressed inflation expectations, and therefore the 10-year flushed down, and as a result, bank stocks also crashed. The names bucking the trend on Friday, the usual suspects, of course, every time we get a surge in COVID, the Modernas, the Pfizers, the Zooms of the world, these are the kind of stocks that outperformed on Friday. But I caution you here not to buy these stocks right now, because A, you could be surprised that this new variant is not as serious as they thought it was, wink wink, or we have an announcement that Moderna or Pfizer developed a new jab, a new booster for Omicron, and that's going to do the rotation of the rotation of the rotation of the rotation. You're going to be confused here. Number 2, in my notes, I believe that the crash in oil prices was overdone. It was a knee-jerk reaction, and the reason is, even if Omicron is serious, OPEC will respond by suppressing the supply next year. And therefore, OPEC has the power to maintain higher oil prices. Also in my notes, the market breadth, the advance to decline ratios. It was 10% advancing for the NYSE, 87% declining. For the NASDAQ, it was 16% advancing versus 80% declining. Now, every time we have these suppressed ratios, the algos respond by popping the indices higher the very next day. And this could happen in the overnight session in the futures, or even the market opening up higher, gapping higher in the morning. But be careful here, because my hunch is we're going to have a gap and crap. And if it happens, it will be due to the change in sentiment as we head to the end of the year. It is bad either way. The Omicron scenario is bad, because this time around, we're not going to have stimmies to rescue the economy. We cannot afford it. Number 2, if Omicron is not serious, then we go back to the Fed raising interest rates abruptly. Either way, it's going to be a bad outcome for the stock market. And therefore, I'm seeing in my practice at least, a lot of clients saying, just dump it all. It was a good year. We got to get out before they raise interest rates, or even worse, Omicron takes over. And a lot of people are even thinking about shorting the market. So if that sentiment sticks, and it was not just an emotional overreaction to Friday's action, then we will see more selling. We will perhaps see the market gapping higher in the morning, and that will be followed by more selling. So it is a battle of sentiment right now. If the dip buyers are still alive, and they say, you know what, we missed out on the previous dip and we should buy now, I think it is suicidal, by the way. But if they do, they could push the indices a little higher. It is a battle of sentiment. And therefore, we're moving on to the charts analysis, starting with the SPY 30 minutes chart. We had the gap and crap, followed by a bear flag, which resulted in another flush down and a formation of another bear flag, perhaps a larger bear flag. And on Friday, the market opened up gapping down, violating the support of 466 and also the support of 461.5. So we are now looking at the support of around 453. But hold the horses here. If the gap and crap scenario happens, the market could gap higher all the way to the now resistance of 461.5 before selling off. Because watch the indicators here, the RSI, the MACD, highly suppressed. We should at least have a pop higher in the futures overnight. Speaking of, here's the daily chart for the futures, the SPY. We have the double top formation. We have a crossing to negative territory in both the MACD and the RSI indicators. We have a surge in volume and a flush down candle, erasing many days, if not weeks. This is a classic confirmation of a market reversal. So regardless of the pops we're gonna have or might have, there will be an opportunity to sell, at least for now. And here is a weekly chart for the SPX, the cash index, reaching the top of the channel and reversing, as expected, by the way. This remains a healthy bullish trend for the market until and unless the lower band of the channel is violated. What about the Qs? 30 minutes chart. Similarly to the SPY, we had a gap and crap followed by a bear flag, resulting in a flush down and a formation of another bear flag, a larger bear flag, which resulted in another gap down, violating the support of 397. We are now at the support zone. The likelihood is we might see a pop overnight in the Qs, but watch out here. My hunch is it's not going to last. And here is a daily chart for the continuous contract of the NASDAQ. We have a confirmation now. Both the RSI and the MACD indicators are in negative divergence. We have a reversal candle, a confirmation of the reversal candle. Now we have to identify support, at least for now, which will be 15,976. You can make that 15,975, doesn't matter to me. But if that support is violated, watch out here. We're going to have another round of a flush down, erasing multiple green candles. Because one way you can look at the chart, if we bounce, we could have a formation of a head and shoulder. Another way to look at it, this was a channel with defined peaks and defined valleys. And the lower band of the channel was violated, ending the trend. And here's a weekly chart for the NDX, the big NASDAQ. It appeared as if the NDX is popping out of the channel. And we now know that this is another bull trap. In all likelihood, we're going to go down to revisit the lower band of the channel. What about the IWM, the Russell 2000, from a 30 minutes perspective? Oh boy, what a load of pain. Flushing down, violating multiple support levels. And now we're looking at 218 for support. But in all likelihood, the Russell should pop higher in the morning as a reflex trade. Perhaps it will revisit 223 as resistance and then get rejected from there. So watch out for the gap and crap scenario. If the support of the resistance is beaten, turned into support, then we have something different. We have dip buyers buying the IWM, and perhaps Omicron is not as scary as we first thought. And here's a weekly chart for the RUT, the Russell 2000. What a classic bull trap this was. Unbelievable. We're now back at the same consolidation range the Russell 2000 has been on since the beginning of the year. What about the Dixie, the dollar index? It flushed down on Friday, and the reason is the dollar was rising higher in anticipation of faster tapering and tightening the monetary policy. But we also see in other currencies pretty much bombing, and that added fuel to the fire of the surge of the US dollar. But if we are about to be infected with Omicron, and whether we have a lockdown or not, the lockdown will happen via the consumer sentiment. The consumer will stop shopping outside. The activities will be reduced, and therefore the dollar will weaken against other currencies. That's the assumption for now. But watch out for Tricky Dixie. It plays dead and then it pops higher again. This is all right now on the hands of Omicron. If it is not serious as we thought, we'll resume the same playbook of the dollar surging higher because the Fed will tighten. If, however, Omicron is serious, by serious, by the way, we mean evading the current jabs. If that happens, then the dollar will flush down. And here's my favorite indicator, by the way. Gold. If the flush down in the dollar is legitimate, or the flush down in the 10-year yield was legitimate, then gold should have popped higher. But gold pretty much remained flat throughout Friday's session. What does that say? One of these two, the dollar or the 10-year yield, is faking it. This is at least what Mr. Gold is saying for now. And here's the chart of the 10-year yield, a massive flush down reversing multiple candles. What does that say? It says if Omicron is serious and we have lockdowns or perhaps restrictions, then the forecast for growth will be much lower. What does that mean? Inflation expectations will also go down, and therefore the 10-year yield will go down because raising interest rates by the Fed will be pushed further down the line. Yes, we closed below 1.5, but I'm not going to make a big deal out of this one because it could be a knee-jerk reaction. Likewise, here is the weekly chart for the TLT. All the negative divergences, whether be it in the RSI or MACD indicators, are now reversed. And the TLT is closing above 149 for the week, but I'm not buying it yet. I need a confirmation. Another weekly candle closing in the green above 149. Why do I say that? What if the action of Friday was a knee-jerk reaction and the scientists come out and they say, you know what, Omicron, not that serious at all. Oh, by the way, the current jabs, they still work. All what you have to do is get your booster and you're good. You're good to go. Then the TLT flushes down and we're back to the same playbook we were at before Friday. What about the VIX? An insane move on Friday. The VIX popped higher by over 50% in a single day. When we look at the 4 hours chart, we are still at positive territory on both the RSI and MACD indicator, but specifically the MACD. What does that mean? The strength in the VIX continues and the weakness in the SPY also continues. When does the pop end? When you see the MACD indicator crossing into negative territory, creating red impressions on the histogram from a 4 hours perspective, you'll know right away that we're getting closer to a bottom in the SPY. For now, both the MACD and the RSI and the VIX are a little overstretched, so we wouldn't be surprised to see a pullback and then a resumption of the pop higher. The MACD from a 4 hours perspective on the VIX has been an accurate, spot-on indicator. Every time we have a pop over the positive line, creating green impressions on the histogram for the VIX from a 4 hours perspective, that resulted in at least a double-digit pop in the VIX and a decline in the SPY. And here's the daily chart for Apple. Remember, as Apple goes, so will the market. Well, Apple is trading down. It got rejected from the upper band of the channel, as expected, by the way. And if Apple continues to flush down, it will go down all the way to the lower end of the channel. But hold your horses here because we have multiple stops before we go there. Stop number 1, 150. That will be support number 1. Support number 2 will be 145. They continue to buy call options, by the way, on Apple, anticipating a breakout above the channel. We'll see. And what about a daily chart for Tesla, the souffle? It continues to hold on, impressively so, by the way. But we have a few problems here. The chart, at least for now, failing to break above 1,174.5. On top of that, we have made a lower high. For now, we still have a higher low. If we make a lower low, then we got a problem here. Another bad signal. We have a failure to cross on the daily from a MACD perspective, indicating that we have more weakness to come. Of course, the bears, as I've told you, the brave bears are shorting right now. The disciplined bears will wait till 1,000 is violated from a daily chart perspective. And by the way, we have more bad news for the souffle. Another one. Tesla in Pennsylvania catches fire. Flames spread to home. The good news is, with natural gas prices surging out of whack, souffles can provide warmth at a cheaper price this winter. Anyways, moving on to tulips, BTC, what's going on here? We are at the support zone. What is the support zone, you might ask? It is between 53,200 55,300. BTC should rebound from that point. Now, if it fails to do so, then we got a problem and run for the hills. If 53,200 is violated, we're going to have a massive flush down in BTC. Lastly, what about AMC? Flushing down, but rebounding from where? the support of 36.5. Let's say AMC pops higher in the morning. We will look at 39 for resistance. If we have a failure, then the destination will be back again at 36.5. If 36.5 is violated, then the last support will be 32. Anyways, moving on to the conclusion of this video. What do we have on the economic calendar starting this week? On Monday, we have pending home sales. On Tuesday, we have the S&P Case-Shiller Home Price Index. This will be important. We also have the Chicago PMI, the Consumer Confidence Index. On Wednesday, December 1st, we're going to have the ADP Employment Report. On top of that, we're going to have the manufacturing PMI and the ISM Manufacturing Index, in addition to the Beige Book from the Fed. On Thursday, we're going to have, per usual, the weekly jobless claims, and on Friday, the big one, the non-farm payrolls, along with the unemployment rate, the average hourly earnings, the services PMI, the ISM Services Index, factory orders. All of these will be important, yet the dominant player will be Omicron. And the sentiment regarding Omicron versus raising interest rates. It is a bad outcome either way, because we're not going to have stimmies this time around. Anyhow, folks, I hope you found this video informative. If you did, press the like button and subscribe. If you have a different view from mine, feel free to share that in the comments. We encourage open conversation here. Anyhow, this is all I got for you for now. Thank you for listening. Thank you for watching, but I will talk to you again tomorrow.